And I sold my house because in the crypto. And it's like crypto is mature enough. It's not that risky if you know what you're doing. It doesn't have to be in Bitcoin. Yeah, we've just had another cycle, right? It's like little ripples a cycle. No more 4-year cycles. This is the final cycle that takes us to 10 trillion, 25, 40 trillion, 100 trillion, whatever it is. This is the one that bumpy. I think it's very, very over optimistic right now with all of these. Even the stock to flow, I think it's over optimistic. Like when we say this, we've got to say we've got to, like discounted cash flow to today's value, because we don't know what the US dollar is going to inflate to in the future. In today's dollars, we're at, we're flirting with 1 trillion. I think we need to get past that to get legitimacy. I think from 1 trillion to maybe the gold cap will be relatively smooth. Beyond that, I think it's gonna be slow going. I did sort of like wisdom of a crowd thing, and I just went out, what do you think it'll be? 1 trillion, 10 trillion, 100 trillion, and vote weighted average was about 40 trillion. It's fair. It's like US dollars is, I think it's like 20-25 trillion. Well, what are we at? Like, let's say we're at like below $1 trillion, but let's say we're at $1 trillion and we go to 10 trillion, which is gold. That's a 10x. So maybe we go to, it's a 40x to $40 trillion if that is the end target. It's 40x. Gosh, maybe like 133x in the last bull run up to 2017. 133x, right? That was like 2 years. This is going to take a decade or more to get to that full saturation. So I'm like going...
Unless there's, like you said, a black swan event that collapses the dollar, in which case money may flow into Bitcoin somehow.
Yeah, maybe. But we're talking about, today's dollars and like... Yeah, maybe. No, I don't think so. Like, it'll flow into traditional assets as well. I don't think Bitcoin's main enemy is fiat. No, wait. Like, I don't say enemy. It is probably that fiat is the enemy of Bitcoin.
I was like, wait, what?
I'd say the market competition for Bitcoin is not fiat, because no one holds fiat as a store of value, unless you're a trader. I'm storing my value for 48 hours before this thing bottoms, right?
That's it.
Right?
Yeah, short-term store value.
You're buying like a house, right? You might be buying fine art. You might be buying equities. You might be buying collectible whiskey, right? So that's the competition. So that's like, how much of a chunk are we going to take out of the real estate's $200-300 trillion cap?
Real estate, equities, commodities, Bitcoin, crypto rather, and then cash. Like, what percentage do you have in cash right now? Historically, what percentage do you have in cash, and what is your percentages roughly over like the last couple years and then moving forward?
It's changed a lot, right? Like in 2017, it was like moon boy stuff, right? It was like, well, geez, you're going 133x and you're going to like 1,000x on shitcoins. Like, I was like zero cash. Like, I was like, oh, what do I have to sell now to pay rent or like my next plane ticket? It was really like that. But now it's like absolutely 10% at all times, no matter what. And I need to get that up to 20. And I think the way we're going, choppy upwards, I'm going higher than 20 eventually. The goal probably is cash yield 50%.
I think you said 20 to 40% you might do, right?
Yeah, I think the end goal would be around half of it in cash yield. It's just set and forget. Like, if you get a good deal, and like if you look at stock to flow, fundamentally it's like, this is how much scarcity there is, and this is how we value it, right? And so it just turns out it's all on a straight line. It's very scarce, like gold. It's worth this. Same with silver. Real estate's even more scarce. And it's all Bitcoin in the early phase, Bitcoin in the 2012 phase on this line, but it's deviating, right? But after the 2015 halving, it deviated below it. I mean, now it's even further deviated from that straight line. 2015, what happened?
Well, there's a lot of other options with NFTs and altcoins and for these types of assets. Yeah.
So like the floor and stock to flow, in my view, is that it views Bitcoin as the asset class. Yet investors do not think of Bitcoin as the asset class. They think of digital assets, crypto as the asset class. And you can talk to any family office. Hey, what are you buying? Bitcoin, a bit of Ethereum, maybe some NFTs, right? So they're deploying that capital that they've reserved into the bucket called crypto assets. So now it's been diluted. So like 2015 is interesting. It deviated from that line because Ethereum came along And now in 2021, like last year, it deviated further because